Have you ever wondered if your geographic location is holding you back from launching a global business? If you are a non-US resident trying to build an online company, sell products internationally, or raise capital, you have almost certainly bumped into a massive barrier: accessing the US financial ecosystem. For founders based outside North America and Western Europe, opening a US bank account, setting up Stripe or PayPal, and ensuring proper tax compliance can feel nearly impossible without physically flying to the United States. This is where platforms like Doola come into play, offering a business-in-a-box solution that handles US LLC formation, employer identification numbers, registered agent services, and ongoing tax filings. But a critical question remains: which countries offer the absolute best environment for global entrepreneurs to leverage Doola effectively? While Doola technically supports founders in over 170 countries, not all operating environments are created equal. The reality is that registering a US LLC is only half the battle. The other half involves seamlessly connecting that US entity back to your local life, local banking options, and regional regulatory frameworks. Many entrepreneurs jump into forming a Delaware or Wyoming LLC through Doola without evaluating how their local tax laws, banking integration options, and currency controls will affect their day-to-day operations. This oversight often leads to unexpected double taxation risks, blocked payout accounts, or intense administrative friction. To understand which countries are ideal, we must look at three crucial criteria: ease of international banking integration, lack of restrictive local foreign exchange controls, and clarity around foreign source income taxation. When these three factors line up, using Doola becomes a smooth, high-leverage move for any digital founder. The first tier of ideal countries includes tech hubs with modern, open financial infrastructure, such as Singapore, the United Arab Emirates, Estonia, and the United Kingdom. Founders operating out of these regions enjoy seamless integration. If you are based in Singapore or the UAE, for instance, local tax frameworks are exceptionally favorable toward global income structures. Furthermore, digital banking platforms like Wise and Mercury interface effortlessly with entrepreneurs residing in these jurisdictions. Doola allows founders in these hubs to establish a US footprint quickly, giving them direct access to US payment processors like Stripe while effortlessly transferring profits back to their local accounts without navigating arbitrary exchange restrictions. The second major category where Doola delivers life-changing value is emerging digital markets with large talent pools, specifically India, Brazil, Mexico, and parts of Southeast Asia like Indonesia and Vietnam. For entrepreneurs in these regions, the primary challenge isn't a lack of skills or products, it is payment friction. A software agency in India or an e-commerce brand in Brazil often loses client deals simply because global buyers prefer paying via US bank transfer or domestic credit card processors. By using Doola, founders in these countries can establish a US LLC, secure an EIN, and unlock global payment options that were previously inaccessible. However, founders in these regions must be proactive about compliance. For instance, Indian residents must ensure their US LLC setup aligns with local overseas direct investment rules and FEMA regulations. Doola manages the US side of compliance, making it essential for the entrepreneur to pair it with a local accountant to handle cross-border reporting. We must also address the common fear many international founders hold regarding double taxation. A widespread worry is that forming a US LLC will automatically force you to pay hefty income taxes in both the United States and your home country. In reality, single-member US LLCs owned by non-US residents are generally treated as disregarded entities for US tax purposes. As long as you do not have physical employees, offices, or direct real estate operations in the US, your US tax liability is often minimal, though you are still strictly required to file annual informational returns like Form 5472 and Form 1120. Doola automates these annual US tax filings, which removes a massive burden of anxiety for foreign founders. Your actual income tax responsibility usually flows through to your home country, which is why living in a country with clear tax rules regarding foreign income makes the entire model far more profitable. So, what is the ultimate actionable takeaway if you are deciding whether to use Doola from your current location? First, evaluate your banking options. Verify whether major fintech providers like Wise or Mercury accept applications from residents of your legal country of residence, as this dictates how easily you can move money out of your US LLC. Second, confirm that your local government permits owning foreign entities without excessive bureaucratic overhead. Third, utilize Doola's end-to-end information and compliance suite to handle your US EIN, registered agent, and IRS filings, while simultaneously securing a local tax advisor in your home country to keep your local reporting spotless. Setting up a global business structure no longer requires moving across the world. By pairing a US LLC formed through Doola with a clear understanding of your local country's financial rules, you can run a fully compliant, highly scalable global business from virtually anywhere. With that said, thanks for watching, and until next time.